in September's Stocks and Commodities magazine. So if you haven't had a chance to read it, I recommend you try to find it at your local store, or if you have it delivered, it'd be a great article. Okay, so with that, I'm going to close this. So I think I'd like to talk about one other thing, or a few other things first. The first thing is, remember that THD's philosophy is that we don't trade during market opens. And so we are now at the market open. So we're not going to do any trading until 6:45 my time. I'm on the West Coast. And I think what's important about that is you have a lot of volatility and a lot of spikes, and you can get really hurt. And it's not that you weren't perhaps correct in your presumption of which direction the market would go in, but unfortunately there's large spikes that will go against you and take a little trader out. So I happen to subscribe to that 100% from the hard knocks of life. Then the next thing you want to look for is you want to see if there's any reports. And so you want to go to Forex Calendar, which I now have open up on my screen, which you should all be able to see. So we're looking at Wednesday. And as far as trading the U.S. session, because we're done with the London session, so as far as trading the U.S. session, I don't really see any reports that would be critical after this time. The next report that you really need to be concerned about wouldn't happen until 6:30 p.m. So that's in the evening with Australia. So there's no red reports that we need to be concerned about today. So that means that anytime after 6:45, we can start trading. So then, with that, I think since we're waiting for the market to open and take care of its little volatility that it's going to go through, or not, you don't know. I'd kind of like to take a few moments to speak about some other things as far as when you get up in the morning, and what do you do to prepare yourself to start trading. So I can tell you that what I like to do is, first thing I do is I get up and I look at Forex Factory, so I have an appreciation for when I need to be ready. And actually what I do is it's either Saturday or Sunday, I look at Forex Factory and I look at the days that the critical reports are on and what times they're at. For instance, when Big Ben, the Fed Reserve, speaks, then I know I have the day off. So that's why I like to do it during the weekend, because then I have an appreciation for what day of the week I can take off versus, I have a full week I can trade. So I like to know that in advance instead of getting up in the morning and being surprised. Then after that, what I like to do when I get up each morning is I like to sit in front of my charts, and I look at my radar screen first to see if the different futures markets are aligned. And then from there, I'll look at my daily chart, and I'll see what the daily chart's telling me, and I work my way through. I use a daily, a 720, a 180, a 45, a 12, and a 3-minute chart. And what I like to do is I like to look at the higher time frame, so I stop at the 12-minute chart because it changes too frequently, especially prior to the market open. And I look at them for, how's price acting versus volume. Where's price in relationship to the ATRs and the slow moving averages? Where are my ADXs? Are they supporting a trend or not? And I look for my time frames to be aligned, or am I getting mixed signals between my different time frames? And do I have congestion? And those are the things that I like to look at, and I mark up my charts, with lines and arrows and all that, so that I have an appreciation for where I can anticipate that the market should go. And I think that's key, is that you can only anticipate. No one knows. There is no crystal ball. But you want to look at it and have an appreciation for, I anticipate that price will move in this direction. Therefore, I will be taking trades in that direction. And quite frankly, that's even if you're going to counter trend. You should have something on your higher time frame that tells you that there's a counter trend trade coming in, or you wouldn't be doing it. So pretty much that's what I like to do. And then once the market opens and it's moving, I do a quick review of my 12-minute charts uh, and get them lined up. You know, whether they're at the top or at the bottom or the middle of the trend, whatever's happening right now. And so I like to get that marked up then at the last moment. And then I'm pretty much ready to start trading myself somewhere around 10 to 7, 5 to 7. But I don't really put pressure on myself because I think it's more important to understand the charts than it is to hurry up and rush into a trade. So with that, I think we'll go back to the beginner's screen, which I have. I happen to call it trade entry, but it's the beginner package that Gail has been advertising for THD. And you can see that I have two workspaces open on my screen here for you to see. So the first one I have here is I have gold, and I have crude, then I have the NASDAQ, and then I have the euro. And then what I like to do is I've got another screen behind that, another workspace. So I have soy, and I have corn, and I have the Swiss franc, and I have the Japanese yen. The reason I like to look at a minimum of 8 futures markets at any one time is because there's a lot of times when you'll have congestion and the markets aren't moving. But typically you can find one or two that are moving that will potentially give you a entry to a trade. So someone was asking me, Mr. Simmons, I think, do you trade the ES futures? And the answer is no. I don't trade the ES futures. I just don't. And THD doesn't promote that you trade the ES futures unless you have a large account. So I think that's all there is to that. But pretty much what I trade is what I just showed you on my screen. I am looking at trading options, and I've been doing some paper trading for options. And what's exciting is that it works for stocks. The methodology works just as well on stocks as it does on futures. It really doesn't care what market it is. So that's nice. The difference is, as Angel, for those of you that got to hear Angel yesterday, is that with stocks, what I like about trading the options is that you can look at it in the evening after the day is over, and you can kind of relax and look at the stocks that you've been watching. And then if you see one or two stocks that you're interested in, when you get up in the morning, you can see if they open in your direction that you anticipated price to move in, or wait for it to do what it needs to do. You know, you're watching it for 2 or 3 days, and then you can go ahead and buy your options. So I think options are much lower key, and I kind of like that. It's a nice complement to the futures, which is more intense. You have to be watching your screen every 3 minutes at least and figure out what the heck's going on right then and there on the market. So that's why you don't see the stocks up right now, because I don't watch stocks during the day for the most part. Now and then I will admit, like, I'll watch something like Apple, because Apple's such a large percentage of the NASDAQ. So if Apple's going down, there's a good chance the NASDAQ's going down. So with that, I think, we got 5 more minutes until we can entertain trading. So we'll just sit here and watch. Good morning, Stuart. Hi, Richard. No, you haven't missed anything of much significance. You're okay. Okay, well, we've gone through the first 15 minutes of the market open, so now we can be looking for entries or something to watch. And as I think what I'll do is I'll do a quick review for the audience because I'm not sure who's in the room versus who was in the room the last time I spoke, and if everyone's familiar with the beginning screen. So again, I'll kind of I won't spend as much time as I did last week on this. And if you have questions, please don't hesitate to ask. So first of all, you can see we've got the blue, which shows that we're in an uptrend. We've got the red, which shows that we're now starting to go into a downtrend. And I think one thing that's important that so many people take for granted, but on the live edge of the market is hard to keep up with until you practice. And that is what is a true uptrend. So that uptrend is when you have higher highs and higher lows. And what's a true downtrend, which is when you have lower highs and lower lows. And to keep up with that on the live edge of the market and not get confused at times can be difficult because things can be moving right along on you when you're trying to watch 8 different markets and keep that aligned. Anyhow, then when you come back to, we've got the yellow line, which is your entry line. You get the yellow dot, which tells you when price hits the yellow dot. As long as you have volume divergence at the yellow dot, then you can enter. In this case, you go long because it's blue. And when you get small green dot, that's your profit target. When price hits that, you would remove a minimum of 1 contract. And depending on how many other contracts you're trading, there's different methodologies that you would learn at the webinar that you could follow for that. So the key here is that when it hit that, you have volume divergence. So if I was looking at that, I'd say, well, here's my first volume bar right here. That's my first low. Here's my second low. And that's where I had my entry. And I had a large spike in volume, a significant spike versus this spike. So I personally would not have taken that trade with just looking at this screen, not taking anything from the higher time frames into account. And it works the same way on the sell side. So as you can see, we'll move over here to crude. You had your yellow dot, and when you get your yellow dot, you got your entry. And then same thing, you look for volume divergence. Okay, well, we didn't have volume divergence, but that's besides the point at the moment. I wouldn't have taken that trade. Again, not looking at my higher time frames. Price comes down, you get the large green dot, you made your profit. So that's pretty much what you're looking at there, and that's more or less what we call the easy money indicator. You've got your free volume here, so your blues mean that price is going higher. Your reds mean that price is going lower. When there's no price bar, that means you had an inside bar. No volume bar, apologize. It means you have an inside bar, so that means price didn't make a new high or a new low. And when you have a gray bar, that means that price made a new high and a new low. So you have to look at where price closed to give it credit. So in this case, the bar closed up at the top, so that counts as a blue bar, so you can see that you had an increase in up volume on that bar. We get down here to the ADX. The ADX is a great tool for letting you know if your market is overbought or oversold, and it's what I would call it's non-directional as far as where it lines up. It's always going to go up or down on your screen here for you, but what you see is you get different colors on the line. So in this case, you can see that the line's coming up and it's red, it's bright red, which means you have a strong trend. And anytime the trend gets to be at 50 or higher, that means you have definitely a strong trend supporting the direction of the market at the current time. And when it gets to 70, then the market is definitely oversold. And anytime you get a magenta peak, so it has to be a peak, okay? And so I think what's good to see, this is a great example, is this is what we call a plateau. So the market didn't quite react as you would think it would. So just because you get a peak, again, it gives you a suggestion that the market should go in that direction, but it's up to you to learn how to read price versus volume and validate that the market is moving in that direction. Here is a magenta peak. So you can see it's a pointed peak, and then you can tell you had the peak and the market did come down. So important to note that. This is for the 3-minute chart right here. Then what you see on my screen is I have the next one is it's the visualization but in a heat bar for the ADX, but it's for the 12-minute ADX and the 45-minute ADX. So we'll go over this again. So here, it's easier over here for a moment. Bright blue, what this says is that on the 12-minute chart, that price is still in a strong uptrend. Then it's gone to a dark blue, and what that means is that if you were to look at your higher time frame, that you probably had a magenta peak. So price is now retracing. Then you can see it went to bright red. Well, once it goes to bright red, you now know that it's confirming that it's in a downtrend. So you come to your 45-minute and you can see that it's dark red, which also tells you that it's either in a weak downtrend or that it perhaps was in an uptrend and now is doing a pullback and it's having a retracement. So you would want to go back and look at your higher chart time frames to have an appreciation for what that means, to understand if there's still profit left in that trade, if it's a good trade. And the other thing that you want to make sure that you're aligned with is, with this package, you only want to trade in the direction of your indicators. So, for instance, we have red on the 3, red on the 12, and red on the 45. Therefore, we would only be taking short trades. We're not going to take any long trades using this tool. Some other explanations is you can see here that the 12-minute bar for the ADX is bright blue, but it also is magenta in color. And what that means is that your ADX is at 50 or greater. And so when you see that, and then you see it go to a dark blue, that tells me that we did have a magenta peak. Again, you would go look at your time frame to see that. Then I don't see on these charts at the moment. Nope. You'll also notice now and then you'll see a yellow dot that's above these bars. And when you see that yellow dot above the bars, that tells you that the ADX is at 70 or greater. When the ADX is at 70 or greater, we strongly advocate, THD, that you do not take a trade in that direction. So just say, for example, that these are all showing red, and you had a yellow dot above this bar right here for gold. That would tell me that on the 12-minute chart, the market is highly sold, and that I would be expecting a pullback. So again, utilizing low risk, if I was to go short on that market, then I would expect to be stopped out. So I would not entertain shorts until that ace trade was to take place. So anyway, I just wanted to go through that real quick so that people had an appreciation for it, because now as I look through this, I would say to myself, I'd say, okay, gold, I could entertain a short for gold, but I need to see what my 45-minute chart is doing before I would take that short, okay? And then it says for crude light, okay, I'm red, so I could entertain shorts there. And right now, this to me looks like a better market. And why do I say that? I say that because I have bright red on my 12-minute, bright red on my 45-minute, and look at my ADX on the 3-minute. It's going up. It's a lot more vertical versus for gold. You can see it kind of petered out and it's kind of gone flat. It's lost momentum. So this looks like a better market for me to watch. So I'd be more interested in this, and on my long-term charts, I'd be having crude light up. I look at the NASDAQ. It's kind of the same thing as gold. You know, I've got bright red, I've got a dark red, so I would need to understand why I have a dark red on my 45-minute chart to make a decision of whether I would entertain a short, or is the 45-minute going through a pullback, in which case price will blow right through that ATR, which again would stop me out. And again, you can see that the ADX for the 3-minute is kind of gone flat. And if you remember, when the market opened, we had congestion. Okay, so the NASDAQ's kind of been in congestion. This is a good time to have an appreciation for stay away, at least, especially if you're a beginning trader, because these up and downs like this, they can just take you out and slowly destroy your account. So I'm looking at the euro right now. For me, I see that the euro was really flat. It came down, starting to head back up. Not uncommon for a market open to get a quick change in direction, and then it corrects itself and comes back. But what I see with the euro is that even though it's weak, I still have a dark blue ADX on the 3-minute. I have a dark blue magenta ADX on the 12-minute, which tells me that I probably just had a magenta peak, and we're seeing the ace trade play out on the 12-minute right here. That's what caused this. And now if we looked at our 12-minute chart, we very well may see, and I'm not looking at it, but we may see that this was the bottom where support was. And now it's going back up, price. And I can see that my 45-minute is still showing me that I'm in a strong uptrend and that my ADX is 50 or greater, but I know it's not 70 yet because I don't have my yellow dot here. So again, for me, the first one to watch is crude light in this case. Although I would be going back and looking at my 45-minute charts on gold and the NASDAQ to have an appreciation for what they're doing. So David McCarney says hi to everyone. So I'm sure that those of you that watch the euro realize that the euro has been going up for a while. And this is where I just can't overemphasize the importance of looking at your higher time frames. So this is my radar screen, and I have a weekly chart pulled up. I look at my weekly charts on Monday mornings, weekly and monthly, just to get realigned. So you look at the euro here, and I'll make it bigger in case it's hard for you guys to see. Now you can't miss it. So when you look at the euro, you can see the ATR here, and you can see the price is right up against that. That's a major area of resistance. And you can see that you come over here with your weekly for your euro right here, and you can see that price is only 56 ticks away from that. So there's very little profit left, if any, in the up move. And how come I say that? Well, I say that because I don't believe that volume is supporting the rest of an uptrend. So again, for me personally, I wouldn't be looking at uh, going long on the euro. I'd be waiting for the euro to start its downtrend, and I'd be jumping in and out of that with scalp trades in the middle of that trend, not trying to capture the beginning or the end. That's another thing that I've learned the hard way. I think until you get really good is there's no reason to try to call the tops and the bottoms. You can get all frustrated about all the money you're not making, but what I found is usually you lose more than you could have made. So I just wait. That's me. So let's see what's this. So yes, let's see, George. Let's see if I do this right. Okay, George is asking, does multi-charts have a radar screen? It does. I believe it's called a quote screen. I don't remember, to be 100% honest. Give me a moment here. Maybe I got it written down. Oh, okay. Thank you. Thanks, Jim. It's called the market screen, market scanner. There we go. And so yes, it does have one, and it works pretty much the same way. Multi-charts will do everything that TradeStation does, and it actually will do a few things perhaps even a little better. It takes a little bit more work to get it set up and to keep it going than TradeStation. You can kind of get spoiled by the ease of use of TradeStation, but multi-charts is a great platform. So what I like to do on my regular charts, I wouldn't be doing it on this chart normally, but this is what we're looking at. So I would look at this chart right here, and I like to keep the lines the color that I'm thinking about. So in this case for me, price is moving up, so I've got a volume bar, and so I'll set the line. This I keep myself focused on the fact that, okay, that's my highest volume bar. We're going up. So at the moment, you can see that price has continued up here. So this has made a higher high. Again, this has made a higher high. So I would look at that volume and I'd say, okay, well, at the moment, I do have volume divergence. So if price was to touch the yellow line on volume divergence, you could consider taking that trade. My methodology is I prefer to wait for price to hit the yellow line and price to close, because in the last 10 seconds, a lot can happen to that bar. So I like to have confirmation. So I like price to go up, touch the yellow line, be within 5 ticks of the ATR, and close down in my direction. And have that all happen on volume divergence. If it doesn't do that, I don't take the trade. So again, I think it's Mr. Simmons, not sure, is asking, do I ever use pivot points? Yes, it is Mr. Simmons. Thank you. And so the answer is yes. I like to use pivot points, but I probably don't use pivot points the same as a lot of other people. How I like to use the pivot points and how THD advocates it is you look at the pivot points for your highs and your lows, and you draw your lines across the highs and the lows, and then you evaluate how where your volume is at those highs and lows, and that gives you a hint as price is approaching or pulling away from those highs and lows, uh, where price should go. Should is the key word, not where it will go, but should go. So that's how we use pivot points. And I use pivot points on my monthly, weekly, daily, 720, 180, and 45-minute charts. I don't use it on my 12 and my 3-minute. So another thing to look at is The easy money indicator tells us the risk. So for gold, risk is 15. Maximum risk allowed with gold is 17 ticks. So you could entertain that trade if it was to hit the yellow line on volume divergence. Then you have the risk over here for crude. Now the maximum risk for crude is 13 ticks. So this is showing you that there's 22 ticks of risk right here. So that is not a trade to be taken at the moment, at least not by me. This one here, if you were to have a trade, it's saying 16 ticks of risk. Well, with the NASDAQ, it can vary a little bit, but let's just say that 10 ticks is the maximum risk that you would want to take as a scalper. So again, you wouldn't entertain that trade. With the euro, 8 ticks is your max risk that you would want to entertain. And we've got 7. So if that was to give you a good trade entry, you could take that. And you'll notice that quite a bit after the market's opened. You get that volatility and it makes the lines bigger. This is a great example of the lines opening up here. And so the lines will get bigger. Even over here you can see on crude, you know, the lines are nice and tight. And here you can see they've opened up. So that's to be expected when the market opens. And so again, that's just a time, if you're a scalper and you have, you know, like most of us, you probably have small accounts. You know, we're talking anywhere from $5,000 to $100,000. You just want to stay away and wait for that to calm down. There's always another chance. So I think it was David is asking me, do I like the Aussie? I don't really watch the Aussie that much. And the reason I just don't watch the Aussie that much is it doesn't move that much in a day when I'm trading, during the hours that I'm trading. And I like to watch things that have enough volatility that they'll move. And so I just don't trade the Aussie. That's not to say the Aussie's not a good market. It's just a slower market, and you're going to be there longer, and there's nothing wrong with that. And I want to emphasize that the methodology and the indicators will all work the same. So if you happen to like the Aussie or it works well with your time frame, there's nothing wrong with doing that. So Perry just pointed out that there we go on the first chart. I'm assuming that he's talking about crude. Is that true, Perry? Yes, that's true. That's what Perry's watching. So we've got about 35 seconds left for that bar to close. And it is approaching or touched the yellow line on volume divergence. So if you wanted to follow this methodology, as I said earlier on, you've got various ways you can do it. You can see that it does have some volume divergence. It's a higher risk to enter before the bar is closed, in my humble opinion, but you could enter and go short now, or you could wait for the bar to close and with the volume divergence, and you could enter. So the bar just closed, so you could enter now, or you can have the second method. The third methodology, which is my preferred setup, is that price would now close down, confirming that my expectation of price movement was correct, at least for that one bar, and I would go short. So those are the three methods that you can use this for entry. So I think one thing, again, looking at let me do something here. So here's crude. This crude in a 12-minute chart. So what do we see here? See a big wide bar, and that's a big wide bar. Look at all the little price bars it consumed. So where you need to exercise extreme caution when you see on the higher time frames these wide bars, even though you had volume divergence, you just need to realize that um, your probabilities decrease on that type of a entry because the majority of the time wide bars will retrace at least 50% of their way. This didn't quite come up to 50%. And that's another reason that I personally like to wait for, okay, if this was to close down and I was still within my allowable risk, which for me, allowable risk means my stop is above the ATR. For me, that's an area of resistance that price has to go through to take me out. So that's why I like to look at my higher time frames. Let me adjust that. It's not. Okay, so I was asked if I could put my clipper on the chart, so I put my clipper on there for everyone so you can see that. So let's talk this through for a moment. You can see that with my methodology that I use 13 ticks of risk for crude, and I wanted to have price confirm to me that it would continue down. So you can see that my stop would have been below the ATR. Therefore, I would not have taken that trade. But had you chosen to take this trade when price closed up at the yellow line, then you can see that your stop would be up here by the red dot. So that's an example of where that would have been a better stop for protection, and you could have entered this trade. Again, I would not have entered the trade because of the wide bar on the 12-minute chart. And also, if you were to look at your 45-minute chart, you'd see the same thing. So personally, I wouldn't have taken that trade, but that's the difference. And Perry's asking if Gail's here, and no, she's not here today. Thank you, Bill. So there's some other things you would be looking at for crude. Again, I don't know if everyone has access to crude, but when you look at your higher time frame charts, you would notice that on the daily chart, crude is very close to the ATR. If you look at the 720 chart, you would see that crude is also extremely close to the 720 chart. In fact, I'm not so sure it hasn't bounced off it. So that's another reason that I would not be looking for short trades in crude. But again, as a beginner, you wouldn't know that because you wouldn't understand how to use your higher time frames. So there's nothing wrong with what we took. If you're a beginner, it's a great way to learn, especially a great way to paper trade, just to start to understand it and then figure out how to filter your trades using your higher time frames. Yeah, I think that's why we're sitting around waiting. That's probably something else for people to have an appreciation for, is that when I made a decision to follow this methodology 100% and commit myself to it, which means I stopped looking at the dozens of other methodologies that I've been studying. And as most of you have, I'm sure, somewhere's around 50 to 100 books in my closet that I've read. I paper traded 5 days a week, 10 to 12 hours a day for 5 months before I had the confidence in myself for understanding how this methodology worked, so that when I put my real money on the line, I'd be confident that I would not wipe out my account. So I have been using these methods myself for going on a little bit, maybe just a bit over a year now. And just a little history for me, I still had a regular day job that was quite active last August. But last August, I read about Gail's methodology in Stocks and Commodities magazine, and that's when I got interested in her. And I took her e-course, and it was difficult for me to comprehend everything with the e-course and still hold down a full-time job. So I signed up for a Master the Trade seminar in December, and I took that seminar in Dallas, Texas, and that really helped me start to put things together. So to be, even though I bought everything and started in August, I really didn't start to grasp it until I went to that seminar in December. So pretty much from the end of December uh, through May is how long I was paper trading. Oh, so people are asking my name. I'm sorry. My name is Rick. So someone was asking me if I still have my job, and the answer is no. I decided to retire on January 2nd after I've been with my job for 33 years. So I decided to retire and become a full-time futures trader. How you doing, Kent? So I think as far as, am I making a living? I think it's safe for me to tell you that I'm holding my own, and I'm getting better every day, and I'm not concerned. It just takes time and patience. And I think, again, this is my personal experience, is I don't recommend anyone quits their job and starts becoming a full-time trader unless you're already a successful full-time trader making the money that you need every month to live on. And we're all different. I was very fortunate. I had a great job and was able to put years of money away, so that for me, I can treat this more as a hobby at first and don't need to be concerned about eating. I think that's really probably something that people take for, I don't know if they take it for granted or they just don't think about it. But when you go into trading, the first thing, I think people get all excited. Oh man, I get to work from home and I don't have my boss breathing down my neck. Those damn timelines are gone, and that person over here that I couldn't stand is gone. Oh, this is great. And you just sit down and you start trading. And I think what you forget is that, when you worked in a company, you had a plan and you measured your performance to that plan. And I think that's critical to remember, that it's a business, and it's a private business. It's a private enterprise. It's just there's no employee but you. So you still need to write out your plan, and what are your goals? What are your objectives? How are you going to accomplish them? How are you going to measure them? And then just don't do it once and put it away and look at it at the end of the year. Oh, I didn't do very well there, did I? You should look at it every week. Now, Gail's going to tell you to look at it every day. I'm going to tell you honestly, I look at it every week. But you should look at it, because that's how you get better. It's the old plan, do, check, and then change. Change is great. If you're not prepared to change, you're not going to get better. So, for instance, let's talk about the trading plan, since we're just sitting here watching. For me, in my trading plan, specifically with this particular type of trade, which I would call this a free money trade that we entered. So I went, I would have gone short here if I had gone short. I already told you all I wouldn't have, but if I had gone short here, I would have said to myself, if price does not move in my direction after the close of the next four bars, I would try to exit at break even, and just not be concerned with what it did after I did that. So we've got 1, 2, 3, 4, and price is right there. So right now, where you see price was teasing me at my entry line, I would have exited that trade, because there's not a conviction in price to go down. So I would have exited that trade and been quite happy to just break even and hung on to my money for another trade. So, but these are things that each one of you needs to have in your trading plan. How many price bars are you going to wait after you enter before you decide to exit and hang on to your cash because price is not moving in the direction that you anticipated it to move in? those are little details, but they're very important. And you need to really stay focused when you're in the trade and watching the trade setups. So one thing I think that you should all be looking at as we're watching this crude light trade continue on here is that at the moment we're looking for sellers to come in. We don't notice any new red bars. So we're watching the buyers. And although there are some buyers there, we're not really noticing any large volume spikes. So it's kind of a dangerous time because you really don't know which way price is going to go. It's a good time to sit on the sidelines. Let somebody else that has more money than us, the market makers, push the market in the right direction, and then we look for an entry. So as you look at gold on the left part of my screen, and you look at the NASDAQ there in the middle, you can see that we're no longer, we're not lined up still. So there's no potential trades because your 3-minute and your 12-minute ADX are blue and your 45-minute are red. So on the NASDAQ now, we can see that we have alignment between the 3-minute, the 12-minute, and the 45-minute ADX. So now you can legitimately be watching for long trades. You can see that the ADX right here on the 3-minute is at 70 or greater, which tells you that there's an opportunity for price to pull back because the market at the moment is overbought. So I think for people that have been to the Master of the Trade seminars with the NASDAQ, I'd be paying attention to the volume on the 45 minute and be looking at the ATR for the 180 before I would contemplate taking a trade. I think that's also probably something I should have said a lot earlier for the for people in the room, really for everybody, is that the trading room is not to tell you when to enter a trade or when to exit a trade. It's for educational purposes, and THD and myself strongly do not promote you taking trades from our commentary. Uh, we consider ourselves to be educational. We believe in the fact that we should teach you how to fish, and then you can eat by yourself. And you're not going to be learning how to fish when you're trying to trade and listen to us, and you're going to be making mistakes. Plus, you shouldn't be taking a trade just because we said something. You should be taking a trade because your trading plan tells you that that's the correct entry, and you know how to manage your trades and when to exit. So the euro, you can tell it if you're looking at my charts that I never say anything about it. I probably should have explained myself, but I wasn't interested in it for a couple of reasons. First of all, we have this wide bar here, which to me creates a lot of noise, and I like to stay away from those, especially on a 3 minute chart. But secondarily, again, you can see that the line is really wide here. So for me, the risk would just be too high to entertain that. Plus, when you look at this, again, I'm not looking at my hard time frame chart at the moment, but I was bright blue on my 12 minute. I was magenta. Now I'm dark blue, which tells me the trend is weakening. I probably had a magenta peak, which means that price is going to pull down to the 12 minute ATR. So since I'm at the 3 minute, I'm assuming the 12 minutes down lower. So I'm expecting price to continue down. May not, but without looking at my hurricane charts, that's what I would think. So you'll see that I just marked the chart, got the red line at 94.36, and that lines up with this price bar right here, and you can see the volume. Then the next price bar, which didn't make it down as low as that price bar, you can see that you had about half the volume. So that is supporting that the sellers are not coming back in. And you can see that the buyers are still here, and they're slowly stepping up in volume. So my expectation is that price will probably go up. When you trade, you'll find that you mark up your charts a lot and they get real busy. And so for me, what I like to do, especially on the 3-minute chart, is once I've figured something out, I get rid of some of it because it just gets too noisy and I can't see price. Whereas on your higher time frame charts, they don't get quite as busy. But you still mark them up. So you can see gold is coming down for an entry, except we're not aligned on the 12 and the 45-minute ADX, so therefore you can't consider it. Well, I'll rephrase that. You should not consider it. So we've had price touch the yellow line for the NASDAQ. So I think what you want to reflect on as a beginning trader is 12-minute ADX was bright blue, strong uptrend. Now it went dark blue. That would have me concerned, and I'd be contemplating whether I want to take this trade if it was to continue in the direction of the trade. This is a good example. There's 2 minutes left in the bar before that 3-minute bar closes for the NASDAQ, and you can see that price is blowing down through there. That's why I don't like to use limit orders and enter those trades when the price hits that bar, because there's no guarantee that this isn't what's going to happen, and you want to increase your I want to increase my probabilities of success, so I like to wait for the bar to close and then have the next bar close in the direction of the trade. Plus, with the NASDAQ, there's some things that I spoke to people about, how I'd be looking at the 45, 180, and 720 charts for additional filtering before I would consider a long trade. So had you entered that short on the NASDAQ, you just got the example with the big red dot that you would have been stopped out. So if you look at the crude chart, it's kind of hard to see with all my lines on there. I'm going to get rid of the clipper. If you look at the crude chart, you can see that the sellers are starting to come in and that you're having a negotiation at the moment between the sellers and the buyers. And you can see how the sellers are becoming stronger and stronger in volume, and yet they're unable to bring price down. And you can see where the buyers have stepped up, but they were unable to bring price up. And so this is where you need to be looking at your longer time frame charts to have an understanding of where the market potentially will be going, so that you could understand, anticipate which direction you believe the market would go. So the only good news about what we see here on crude is if you had chosen to go short here, the market gave you lots of opportunities to get out of that if it was going to go against you. And I would hope that your trading plan would not let you be in there for 15, 20 bars just watching it. I'm going to go get some water. I'll be right back. Okay, I'm back. So on the NASDAQ, you can see the 3-minute ADX had a magenta peak. We've got bright red on the 12-minute, but we need to wait for the 45-minute bar to close to validate that we can go short. So Bill was asking me if I'm going to Vegas or North Carolina, and I'm not going to Vegas, but I will be at the advanced seminar in North Carolina. So Kent's asking how come there's gaps on the 45-minute heat bars. So the reason there's gaps, that's down here. The reason that we have the gaps is because you get a bar every 45 minutes. So you're going to get more 12-minute bars, of course, than you are 45-minute bars. And that's because I have mine hooked up. There's two different ways you can set the charts up. You can set it up as I have mine, which is when the bar closes, you get the bar, or you can make them virtual bars, which means that it actually shows you what the bar is doing as it's happening. I don't like that. It makes a messy chart, and I use my higher time frame so I can look at my higher time frame and see that. So I like to have this nice and clean. So that's why I do it that way. So Jim's asking me why don't I trade the Russell. I actually did trade the Russell for quite a while, and then TradeStation came out with a data package that dramatically lowered my costs for my monthly data fees. And the only negative for me was that the Russell, unfortunately, is not included in that because they're choosing not to include that, not the TradeStation, but the exchange. They're choosing not to reduce their fees. So I don't trade the Russell because it's an additional $70 a month for a data feed. So someone's asking me if these are the screens that I use when I'm trading the markets without the SMA. And the answer to that question is these are what I use to alert me to the different markets as to there's something going on that I should be watching for. But as I've said, I also use my higher time frames and review each one of the screens prior to starting the day, and so that I'm aware of what I want to see also happen on these. But it's a quick way for me to watch them all at the same time, and then on my center monitor, I have the all the higher time frames for that market. So someone else is asking me, how long did it take to just learn the colors and the electronics behind all of the charts? So as I said, I pretty much got serious about it from the very end of December through May as far as my paper trading. And I'm going to say it probably took me about 3 to 3.5 months to where I had everything as far as the indicators and how they worked and why they worked and what they meant and the colors and all that memorized so that I didn't have to keep referring back to the information, and I could focus more on the trade setups. So that's how long it took me. So Perry's asking if I'm receiving his questions, and the answer is yes. I can see now. I thought that the questions would automatically move down, but I can see that they don't. So I've missed a lot of questions. So Bob is asking about a phone, and so my phone number is listed in the community site for THD. So if you belong to THD, that's where my phone number is listed. So Stuart is wanting to remind the group that with small stops, so that you have a 2-to-1 profit. So in other words, you're risking $1, but your profit potential is $2. You can be profitable with a trading methodology that only gives you 40 to 50% winners, and that's very true. And that's why it's so important that you manage your risk. That's a very good point, Stuart. So Perry's asking, what do the longer time frames show? And I've given some examples of what the longer time frames show. And you can see their gold or crude light just broke out. So we were talking about that earlier on, how we saw the volume divergence on the shorts and that we thought the price may go up, and price is going up. So I've given some examples of what they show, but I'll show another one. And I think what's important for Perry and for the audience to realize is this is how I like to set up my charts. I don't have all the THD tools on here. You don't need to have them all on here. You need to have what works for you, what makes sense for you, so that you can learn to anticipate price. So in my case, I've got the THD trend. It shows me the color of the trend. In this case, it's a down market. I've got my ATR. I've got my slow moving average. I've got my free volume indicator, I've got my RSI, and I've got my ADX. My RSI also helps me understand if the market's oversold or overbought, but it's a little bit slower than the ADX for me, but it's good confirmation. So someone is asking me about, I made a decision to commit to Gale's system versus all the other systems, and why did I make that commitment? Well, I made that commitment because, first of all, as I said earlier on, I read about the methodology in stocks and commodities, and I was reading what Gale had gone through in her earlier days of trading. And I've been trading for, 15, 20 years, not seriously trading, holding down a full-time job and trading and making some money and losing some money, and being honest, probably lost more money than I made. And her article just really resonated with me as far as, hopping from system to system, not being content, always changing my methodology because I was never satisfied, and therefore you're just increasing your probabilities that you're going to continue to lose money. And that she really treated her business as a forum for education, and she looked at her job 100% to teach me how to fish. How am I going to trade so I can be independent? Because she doesn't want to call the trades, and that's what really resonated with me. Is that I wanted to find someone that could help me understand the method and have support. And so, and Gail has followed through with that, with giving me personally tremendous support way before I had this opportunity to help support her. And I think that's what THD offers that most of the other places, none of the places that I went through offered, was continuing ongoing support, whether it be the live trading room, whether it be seminars, whether it be after the seminars. She typically has 5 follow-up classes that last an hour and a half. And if worse comes to worse and you're getting frustrated that you can't figure something out, you can send her an email and she gets right back to you within 2 or 3 hours. And you can even call her if you need to. So I think that's what THD really has to offer that others don't, is the commitment to you. I really apologize. You guys have been asking me a lot of things. I've been doing a bad job. So let's see. I think it was Chris is asking, are the yellow and green dots pivot and resistant levels? And the answer is that the yellow dots, if you're talking about these yellow dots are where you would enter a trade, and the green dots are your profit targets. So the same thing here, yellow and green. There's other dots that are on the other time frames that you saw, where you have magenta dots, which means that price is higher than the last price, and then there's yellow dots, which means that and price can be lower also on those magenta dots. And the yellow dots means that price is either higher than the last bar but not higher than the prior 3 bars, or the same goes for the lows. So Bill is asking, do I use TradeStation as my brokerage? And the answer is I have chosen to, but there's lots of other good brokerages out there, such as AMP Futures Trading is another great one that THD recommends. So someone is asking here, Chris is asking, does the system give you the short or long signals for where the entry point? The system informs you where it would make sense to take a long or a short, but there's still interpretation, specifically with price versus volume, that you need to understand, and also whether the higher time frames are supporting that position. So I think what I would say is that the methodology does a great job of helping you anticipate price direction per time frame, but you need to interpret it. George is asking me if I know when the Forex rollover date is, and the answer is no, I don't. So someone's asking me, when do I get up to trade and what are my prime time for trade? So I'm typically in front of my screens between 5 and 5:30 in the morning, and I'm typically here trading till around 12 o'clock in the afternoon at the latest, and that's on West Coast time. Thank you, Bill. So Perry asked me a question about a trade. He said, if that is where you are to enter, why did you not take the trade? And let's see, that was at 8:20, so that was 3 minutes ago. So I'm assuming, Perry, that you're talking about the crude light trade that just took place. And in the first place, remember, I'm not here to tell you when to enter. And in the second place, um, there was an entry there, but that's an entry that's taught in the advanced seminar. So you'll have to make it through the master the trade first, and then you'll learn those techniques in the advanced seminar. Okay, I'm caught up with your questions. I apologize to everyone. I took so long. I wasn't ignoring you. I was just learning how to use the new processor. Great questions. Thank you, Pat. So Perry's asking me if I got enough out of the first seminar to start trading, and the answer to that is yes. For me, without that first seminar, I was not capable of following this methodology, and that was my foundation for starting my paper trading. I have been to three of Gail's seminars, and I've been through half a dozen of her webinars. I continue to be educated by Gail. She's a wealth of information, and I just can't overemphasize how much knowledge she has to give and how much time it takes to absorb all that knowledge. And the reason it's tough is because when you're on the live edge of the market and you're trying to be a scalper, which is, pretty quick trades in and out, um, there's a lot to pay attention to and a lot to remember because in the end it needs to become second place to you. Thank you, Micah. So Bill's asking me if I'm going to do this again. And the answer is yes, I am going to do it. I believe it's the 25th, 26th, and 27th. I'm going to be gone for 2.5 weeks, so I won't be around for a little while. But after that, I'm back for the rest of the winter, and I intend to be doing this on a weekly basis. And as I said, I'll be at the advanced seminar too, also. Thanks, George. So if you're watching the euro right now, you can see that the risk is at 7. You can see that we're lined up with bright blue and bright blue, and you could consider this long trade. If you've been to our seminars, you should be looking at your higher time frames before you consider that long trade. Thank you, Weber. Well, guys, I think I'm gonna shut down the room. So I'd like to thank everyone for joining us, and I hope that I helped you out and I taught you something useful for your trading career. And I wish you all a great day, and we'll be seeing you tomorrow. Thank you, Stuart. Thank you, Perry. Thanks, John. Charles. Okay, goodbye, everyone. Thanks, Jim.
The organizer has ended the session, and this call will be disconnected. Goodbye.